This is the video for November the 15th, and I want to start off with FinViz. And we look at the advancers to decliners, easily 2-to-1, advancers versus decliners. High volume in the Dow, high volume in the NASDAQ, relative average volume, but from what we've seen, this is higher than usual in the S&P 500. and the day saw a close with a spike to a new high right at the end of the day. Everything pretty much was green, but look at Amazon. Amazon, Walmart stand out as down, and UPS. We're going to take a look at Amazon in a second and see what's happened on its chart with the Ichimoku. I want to point out something that Sentiment Trader said on his email on Friday. He called it double trouble. For the first time in several months, 2 technical warning signs triggered on the NASDAQ. And you can go to his site for more about this, but the market has to be in an uptrend. A large number of stocks hitting 52-week highs and 52-week lows at the same time, and negatively diverging breadth momentum. The Hindenburg omen. Then you've got the Titanic syndrome. These are not market crash indicators, but right now they're signaling something ahead. The percentage of people who go to his site that are bullish has jumped more than 20% over the last 5 weeks. And you know what happens when everybody pulls into the market bullish? That's when the big guys take over and sense greed and create blood on the floor. Friday alone, there were 600 stocks in the combined 3 exchanges that hit new highs, 193 that hit new lows. So 75% of the stocks making lows or highs were high. So now let's go and let's look at the breadth. The breadth finished right at the neutral line. So we had this bounce up. I was sure we were going to continue money moving out of the market, but that didn't happen. So we got a 1-day exception here. Let's see what happens if this becomes a place of concern and money starts to move back out of the market, or are we going to see a continuing uptrend? So now let's look at the VIX. The VIX, this green line that we put in a long time ago, really shows when, we can go lower, but this seems to be the average where most of the lows have occurred since 2018. Before 2018, we had lower lows in the VIX. And then we go back to 2016, 2015, and 14, and see that this green line represents the low in the volatility index. And that's where we are now. Another indication that there is complacency in the marketplace if no one is looking to buy puts for protection. The S&P 500 popped out of this flag. It could easily continue to run up. You know that I've been conservative for far too long, perhaps, but I've held on to my gains, and last October I didn't, and I'm not going to have that happen again. So I am quite satisfied making hundreds a week instead of losing thousands a week by trying to risk and make thousands a week. So if I make 1,000 a week, 900 a week, in a period that I feel is uncertain, and I do feel it's uncertain, then that's the strategy I'm sticking with. Apple, which I am only short puts on, but I have 6 contracts. Short puts continues to do very well for me this year. It's a very safe play. I've got December 27th, 250 puts now, which I just rolled this week from the December 20th 245s. And, once it hits 268, I believe this will be a resistance point, and then we'll pull back. The value of the puts will increase, and it'll be time to roll again, take profits and roll again. Caterpillar, back into the flag. One day does not make a reversal, and look at the volume. It's been very anemic in Caterpillar. So this up on low volume means absolutely nothing. Look at Apple's volume. Relative good volume. So for the past 4 out of 7 days, we've had average volume. So that's positive. That coincides with the desire to see the stock go higher. You can't say the same for Caterpillar. Now GDX, which I got out of and converted into KL, because I believe when gold moves, KL will move faster than a basket of gold miners. So I'm putting my money into one instead of several dozen gold miners. Finished with this inverse hammer at the bottom of the day. That sometimes signals a reverse, sometimes doesn't. Volume was not particularly high. KL, which I'm taking a trouncing on right now, but I did make a profit before I sold, but now I'm back in again, and I didn't get in at the right time. You can see I bought at 48.20, 500, and at 48.08, 500, and now we're down at 46.93. The 8 EMA stands as support. The Chiku span got support on the cloud. So if you look behind this candle, you can see that the Chiku span got support on the cloud and should be ready for a bounce. So we're going to take a look at this on Monday. We've got that flat cloud here, which should provide decent support if we trend next week and trend in the downwards position. Now we've got 2 Fibonacci's that coincide on 2 different waves, and that should be an attraction point, as well as when they get there it'll be a pretty strong rejection where people are going to be selling. AT&T continues to do very nicely, very nicely. What was its volume like? That's important to see. High volume, so look at that. We had a really nice day, a nice increase here on Friday, and the volume was pretty decent. So that's something good. Whirlpool, gee, that's just terrible performance, and its volume has been quite high. So Whirlpool is not a stock to get back in on. When it lost the cloud here, I said if it bounced here and moved up, the cloud was providing support, that would be a time to buy. Well, it didn't happen. And then, you know, the bottom fell out, but it did get support on the Chiku span did get support on the 50 simple moving average, but I think that's not good enough. The 200 EMA was support for price, 50 SMA was support for the Chiku span. All indications are that we should be going down to 139.56. So let's put that forecast in there and let's see if we're right or wrong. Here's Amazon. Amazon found rejection at the 200 simple moving average and then just continued to fall. Look where the Chiku span ended, right at the top of this candle for support, which indicates that there is a good possibility that we could get that kind of motion on Monday. So let's keep an eye on that, and let's see if the Chiku span gets support off of that candle. And of course we have all these moving averages that are going to be resistance. So that's it for the week. There's no denying that people want to buy in at the top at this point. I don't think it makes any sense to buy in at the top. So many stocks are at their top. If you look at the banks, here's the XLF. It's coming back to its top. That's a weekly chart. You look at Bank of America, not so much. Fifth Third, not so much. JP Morgan exceeded its high, so it's making new highs every day. Citigroup approaching its high. So the good banks are doing pretty well. US Bank Corp above its high. This is the 5th largest bank in the United States and gets overlooked, but it provides a decent dividend, is very, very conservative. Are they a possible candidate for acquisition? They're pretty much a regional bank. They're not a nationwide bank. Should they acquire whoever's in 4th place or 5th place to move themselves up a little bit higher? They're just too conservative to do that, but they are possibly open for a takeover. So the banks are doing well. Let's just keep an eye on volatility. That will be our signal. And right now it's at typical lows. And it could stay here. This is a 1 day. If we look at weekly, we've spent 3 weeks now at this low. And you can see back here that we can spend a lot of time bouncing back and forth off this low before the market gets spooked and does something. So let's just keep an eye on it. Talk to you on Monday. Thank you very much for all your support.